Good morning, traders. Good morning. Happy Sunday. It's 11:40 a.m. Eastern Standard Time, August the 1st. We have a brand new month. Today, I'm going to switch it up a little bit. Some of the viewers asked me to analyze three different stocks. And what I'm going to do is I'm going to do that for them. Those that asked, you know who you are, so I'm not going to mention any names. But this is for entertainment purposes only. This is where I see the stock going, where it can possibly go, and where I would get in if you didn't have it yet and maybe wanted to buy it. So without further ado, I'm going to start off with the first stock. It's DLTR, okay? Dollar Tree, okay? So DLTR, that's the ticker symbol for Dollar Tree. The first thing I'm going to do is I'm going to go way out. And I usually go to a monthly chart, okay? I want to take a look at the monthly chart. This is a 10-year monthly chart. It's giving me history over the last 10 years. And as you can clearly see, basically Dollar Tree over the last 10 years has been a really good stock. As you can see, it's put in a lot of higher lows. And it's continuing its staircase to the upside. Obviously, right here, this major pullback was, during the coronavirus back in March of 2020. And we had a big dip, just like everything else. But at the same time, it looks like Dollar Tree, I like it. I mean, I like it on a long-term chart right now. As a matter of fact, you can clearly draw a trend line here. And I'm going to show you. Let's just take it from here. Let's see, the low is 37.47, so let's take that here and work our way across. There you go. There's our trend line, folks. Okay, now, when you draw a trend line, it's okay to, take it from where the wicks are. The bottom of the wicks is important. However, when you draw a trend line, make sure you try to connect as many points as possible. So as you can see here, I've got this trend line. I started it here. I connected it to this lower candle in July of, it looks like 2000 and, what is that, about 16, around there. I connected it here, and then I just snapped it across. And as you can see where we are right now, we are above that trend line, okay? So it looks good from a technical standpoint. But let me just remove that. And then next thing I do is I go to a weekly chart. So I'm going to go to a one-year weekly chart, okay? Now, these are all weekly candles. I'm a price action trader, so I really pay attention to candles. Reason being, candles hold a lot of weight. The highs and lows of the candle, if price is in between the high and the low of a candle, the high of the previous candle obviously is resistance, and the low of the previous candle is obviously support. Okay, and they hold a lot of weight because they hold a lot of data. Now, monthly candles are obviously hold a lot more weight than weekly candles because they have about a month's worth of data. So there's a lot more weight. So taking it from a weekly chart, let's just see here. Tremendous amount of consolidation in the last 9 weeks, okay? You can clearly see that there's also a lot of support in this area. I'm going to call it the $97 area, okay? And let me just draw, and I'll show you why. Let's see here. Okay, all right. As you can clearly see, this area back a year ago was an area of resistance right here. Okay, but then we broke out and put this monster candle in November of 2020, okay? And then we obviously went off to the races. And what did we do? Well, usually, stocks like to repeat themselves. History repeats itself in the stock market, especially when it comes to stocks. And usually what happens is they go on for a run, and then they come back and they test the support, which was once resistance. And that's exactly what happened here with Dollar Tree. It came back, it tested the area that was once resistance, it became support, and it bounced off there. And obviously right here, we have a new area of resistance, which is obviously the 1-year high of $120.37. Okay, so now what did we do? Well, guess what? It pulled right back to that area of support that was once resistance. So as you can see here, this is a very strong area of support. Now, I do like Dollar Tree. As a matter of fact, I'm going to put this on my radar for next week. However, Dollar Tree would have to break $100.82 for me to get in. Okay? So I like it if it breaks $100.82 only. And that's the previous week's high, $100.82. So for the family that's in Dollar Tree that asked me to analyze the stock, I do like it. If you're not in it, I'd like it to break $100.82 before I take the trade, knowing that 182 now becomes the support. So it could break out of here and then off to the races, but again, we don't know. But it has to break this $182 cent area. Now, you will see some resistance as well at about, the first area of resistance is going to be 102.15. You want to write that down. That's going to be your first area of resistance, 102.15, which is the 621 candle, June 21st candle. The next area of resistance is going to be $102.62. So that's the second area of resistance. So first area of resistance, 102.15. Second area is going to be 102.62. The third area of resistance is going to be $104.64. That goes back to August candle of last year. Okay? Let's take a look at the daily chart. Yeah, tremendous amount of consolidation. Wow. Oh, guess what, folks? We also have a gap to fill to the upside. So $103.85, you want to jot that down. That's also going to be an area of resistance. Okay? Because that's what happened was back on May 26th, it gapped down to the downside. Gaps always have to be filled. Eventually, they always will be filled. Okay? So, but the gap, the high of the gap, which was on 527, which was 103.85, that will be an area of resistance. So just watch out for it. But I like it. I really, really like DLTR. Thank you for pointing it out. One of the viewers, I like it. And again, if you're in it, stay in it. I would hold it. I would get out if Dollar Tree. I'd probably put a stop, depending on the size you have, or I'd put a stop at $95.86, okay? You can make it a little lower, maybe $95.75 if you want. The reason being, that's the last area of support, okay? If it breaks this candle here on 3-3, which is the March 3rd candle, it will go lower for sure, okay? That means that support area is not holding. So I like it if you're in it, stay in it, and if you want to play it, a break of $100.82, I would take it long. Okay? So that's my analysis on DLTR. Next stock is STX. Okay, somebody asked me to analyze Seagate Technologies. Oh, going back to Dollar Tree. Okay, now, from a fundamental perspective, I am not a fundamental trader, but just think about one thing. Inflation is running rampant. Okay? So, I'm assuming Dollar Tree is not making the profits it once was on product, okay? So keep that in mind. Maybe that's why it's gone down from $120.37. Okay, so, you know, inflation it's just been going crazy. So, you know, I'm assuming that, you know, Dollar Tree, they sell products, you know, $1. How much profit are they making, or even are they making any profit on the product? I don't know. So just keep that in mind, okay? Next stock is STX at Seagate Technologies. All right, so let's see here. Let's go to a monthly chart. So I'm going to a monthly chart. As you can see clearly on a monthly, I love going far out because it really paints the picture of where we're at. If you guys don't know how to read support and resistance, well, I promise you it's the most important tool. And you have to learn how to identify areas of support and areas of resistance. As you can clearly see, Seagate back from 10 years ago. This candle here, 69.40, is definitely an area of resistance, massive resistance, okay? And right now, that $69.40 range actually becomes support. So, you know, if Seagate does pull back, it might come to this area here, maybe a little further lower, around there. 63.90, I see some support, okay? And, you know, maybe it'll bounce off of it. I don't know. I don't know. All I can see is that there is clear support in this area. You know, resistance, once an area breaks, once a stock breaks an area of resistance, which we can clearly identify, let's just call it about $65 a share right here, it usually tends to run. But what usually happens is stocks usually pull back to that resistance, which now would become support. Now it's a matter of them holding it or not. So, yeah, that's a 10-year monthly. Let's go to a 1-year weekly. Okay, as you can see, there's a lot of consolidation also in this area. I like Seagate. I think that it has to break this candle's high, $90.72. So that's it's at 87.90 right now. I would, if you want to take the trade, you can. If it breaks this past week's candle of 88.95, let's call it 89. However, realize that $90.72, which is the July 12th candle, you will find resistance here. Okay? So write that down. $90.72. So if you want to take the trade, okay? 88.95, call it 89. Take it at the break of 89 only, knowing that 89 now will be support. Okay, so if it breaks 89, you want to take the trade, great. If it comes back down and breaks this 89 area, you want to get out, guess what? It didn't cost you anything. Okay? Capital preservation is key to this business. All right, but however, you are going to find resistance at $90.72. Let's take a look at the 1-year daily. Yeah, I like it. If you're in it, stay in it. If you want to take it, again, you can take it at $88.95. Take it at 89. Okay? Take it at $89, knowing that $89 then is going to be support. But be careful with the $90.72 area, okay? Because that's going to be an area of resistance, and chances are 9 out of 10 times it always pulls back a bit. So if you want to take some profits there, maybe get back in, that's fine. But I can clearly see that there's a ton of support at this 83.89 area right here, okay? As you can see, there's a ton of support here. And if you take a look what happened. You know, it came back, touched the support before it made an all-time high of 106.22. And then what did it do? You know, starting in June 8th, it just came down every day. And guess what? It went almost to the penny to find that support again. So, see, as you can see, history always repeats itself. That's why it's important to learn support and resistance. So, yeah, that's my analysis on STX. Last but not least is TRIP, TRIP. Trip Advisor. Okay. Wow. Okay. Let's go to a 10-year monthly first. All right. So this is a monthly chart. As you can see, it's done nothing but go down. You can clearly draw a trend line here to the downside, and then it broke it. Okay. So okay. I just want to look at some areas of resistance. Obviously, there's a ton of resistance at $65.50, but we're way below that. We're all the way at $37.95. And there's a ton of support right around this area here, which is $30 area, okay? There's a lot of support in the $30 area. Let's see. Okay, and this candle's low, which is 26, so $26 to $30, there's a lot of support in this area. If you're in it, let's just say you're in it and you want to hold it, but if it starts pulling back, I'd get out of the way if it breaks 30. Okay, because there's a ton of support at 26, but you don't know. I mean, it can go visit 26 again. It can break 26 easily. So again, from the fundamental aspect, with the coronavirus growing, I don't know what's going to happen. Are things going to go back to pause? Our state's going to be canceling things, shutting things down? I don't know what's going to happen. All right, so let's take a look at the 1-year weekly. Yeah, it's just terrible chart. It's just been going down and down and down. I don't like it. If you're in it and you want to stay in it, if it breaks, let's see here. If it breaks $30, get the heck out of the way. There's no reason for you to stay in it, even if you don't want to hold it that long. I'd get out of the way. Let me see here. If you want to get out of the way a little earlier, I'd probably play this doji candle of $33.23. $33.23. Even if it breaks $33.23, I'd get out of the way, to be honest with you. This is a doji, so it's a candle of indecision. That means bears and bulls are fighting a direction, but this candle here I don't like. This is a shooting star to the downside on the weekly. So I don't like this candle. However, if you want to get into trip, I'd only get in on a break of $39.27. You want to write that down. $39.27. If it doesn't break $39.27, stay out of the way. Okay? Let's go to the 1-year daily. These are daily candles. Why is it taking so long? Come on. Oh, I guess it doesn't want to do what it wants to do. It's waiting for data, so I might have a slow either internet connection, which it doesn't. Oh, here we go. All right, so here's the 1-year daily. These are all daily candles. Yeah. Definitely wait till $39.27 before you take this trade. Okay? Now, there's one thing I do like about it, and let me show it to you. When Trip started going down, you can clearly see it's putting in lower highs. Okay? So it's gone up here, couldn't go any higher, came back down, found some support, went up, went here, came down, and as you can see, it's been just on a downward trajectory. Now, if you take a look at this, though, as you can see, it got bought up here on 720, and it made this little run, okay? And what did it do? It put in a higher low. See, it pulled back, it came down, but it didn't break the previous low. Okay, so this is actually a higher low. And now it gapped up a little. So I'm not a big fan of it, to be honest with you. I'm not a big fan of it. However, if you do want to take it and you want to give it a try, again, $39.27. Take it at $39.27, knowing that $39.27 is support. So if you want to take this trade at $39.27, call it $39.30. I would put a quick stop on this if it breaks back down below $39.27. Okay? So that's my analysis on it. My stock, again, for this week, if you want my pick, it's definitely going to be NEO. Now, we do have earnings, which that's the only thing I'm not a big fan of. I believe earnings come out on, it's actually the 11th, so it's not going to be this week, it's the following week. But we should have car report numbers coming out for the month of July. I expect a blockbuster number. If you guys are not in Neo, I would definitely take a trade in Neo only if it breaks $45.20. Okay, if it can get above 45.20, that means it's broken the previous week's high, and we should go off to the races again. Okay, so that's going to be my bread and butter trade here, Neo. I'm not really looking at anything else. I'm pretty much sticking to 1-2 stocks maybe. That's about it. That's my analysis. So I hope this helped. For those of you that want me to analyze some of your stocks, I'd be more than happy to do so. All you have to do is comment below, put in the ticker symbol, and I will make a video for you. If you have any questions, any concerns, please comment below. And all I ask you to do, just hit the like button, smash the bell button. You will be notified every time I post a video. I'm going to try to do more of these, folks. I've been away for a while, and I don't really like trading in the summer. But at the same time, I'm back, and it's back to business as usual. So hope you enjoy the rest of your weekend. Have a great day, and happy trading.